Dallas's housing market is absolutely booming right now. Prices across the Dallas-Fort Worth metro are up 25% year over year, and there is no inventory to speak of on the market. No doubt, much of this has to do with the fact that Dallas is one of the top growth markets in America. It's adding over 300 people per day to its population according to the US Census Bureau, while it's added nearly 1 million jobs to its economy over the last decade. This robust economic growth has translated into huge home price appreciation for Dallas over the last 5 years. However, it's coming at a cost, and I believe home prices in Dallas could be going down pretty significantly over the next several years, especially in certain neighborhoods and zip codes. And so what I'm going to do for all of you Dallas home buyers and real estate investors in this video is cut through the BS and share exclusive hard data on the Dallas housing market so you can understand whether this is the year in 2022 to buy or to wait in the Dallas housing market, as well as the zip codes and neighborhoods that are going to have the biggest price crash going forward. Without further ado, let's get into the data. And we're going to get things started by looking at inventory. And no doubt, if you're a home buyer or real estate investor across the Dallas metro right now, you know that there's very little inventory on the market. And you can see that represented on this map where we're looking at the 11 counties that comprise the Dallas-Fort Worth metro area and their percentage reduction in inventory on the market over the last 2 years. So for instance, Collin County to the north, which includes cities like Frisco, Plano, Allen, and McKinney, has seen an 81% decline in listings over 2 years. That's unbelievable, folks. The amount of homes on the market in Collin County went from 3,400 2 years ago to only 650 today, and that's why you can see prices are up 36% over that span according to Zillow. So what this means for you as a potential home buyer or real estate investor across the Dallas metro is, number one, there's not much on the market due to the low inventory, and that means if you find a home that you like, it's likely that you're entering a multiple offer situation. You might have to bid above asking price. At the same time, you're buying at a record price. Prices have gone up 30 to 40% in 2 years across the Dallas metro, propelling the market to levels it's never seen before in terms of price point. And you can really get a sense of the growth in the Dallas housing market by looking at this graph where we're taking a look at the typical home value in Dallas according to Zillow over the last 25 years, going back to the mid-90s. And here's what I want to point you to, everyone. From 1996 all the way to about 2014, home values in Dallas only went up by about 2% per year from 1996 to 2014. However, since 2014, there's been a turning point in the market in Dallas and things have gone berserk. Prices over the last 8 years have surged. They've more than doubled to account for about 10% per year annual growth since 2014. That puts Dallas in the top 20 of all housing markets in America in terms of appreciation over the last 8 years. And no doubt that's being driven heavily by the economic growth that Dallas is seeing. There's nearly 25 Fortune 500 companies headquartered throughout the metro area, and there's lots and lots of new job growth, new population growth, as well as inbound migration, people moving into Dallas, especially people fleeing California, cities like LA and San Francisco. They often end up in Dallas. They bring their money and wealth with them, which pushes home prices up. One big consequence of all this appreciation in home price growth in Dallas is that the cost of owning a home across the Dallas metro has gone up significantly. As you can see on this graph, the yellow line is showing annual property taxes that a typical homeowner in Dallas pays. The blue line is showing the typical annual mortgage payment, and the green line is showing the combination between the two. You can see that starting in 2015, the cost of owning a home, the mortgage payments, the property taxes started surging, especially over the last year. Well, the typical annual cost of ownership is now all the way up to $24,000. Over the last 12 months, we've seen a, get this, 35% increase in the cost of owning a home in Dallas in just 12 months. And this is where the Dallas housing market growth miracle runs into a brick wall. Home prices and mortgage payments and property taxes in Dallas are getting too expensive. Locals can't afford it anymore. In early 2022, the average worker in Dallas would need to spend nearly 40% of their annual earnings in order to afford a home and the cost of owning a home. If you guys are enjoying the data in this video and you want to see more of it going forward, in particular, your housing market covered in a future deep dive, make sure to like this video and leave a comment below. That's up from around 30% in the long-term average for Dallas. We're now at 40% today, and that could go up even more with rising mortgage rates in 2022. The end result is that the home price appreciation we've seen in Dallas over the last 8 years is running out of steam, and I believe not only is price growth going to slow, it's going to turn negative over the next several years. However, there's greater risk of price declines in certain parts of the Dallas metro than others, especially when you're talking about rising prices above wages. There's certain neighborhoods in the Dallas metro that I think are very exposed to future price declines from this lack of affordability, while there's other neighborhoods that I think are less exposed. And now I'm going to show you a detailed zip code level map of the entire Dallas-Fort Worth metro area so you can understand the neighborhoods and zip codes with the greatest risk of future price declines, as well as the ones potentially with the most security at preventing those declines. And really a big thing that this comes down to is the underlying wealth, income, and poverty levels of the neighborhood you're looking in. And that's what we're looking at on this map, a zip code level analysis of the poverty rate across the Dallas metro area. And by and large, you want to be careful buying in areas with a high poverty rate, because historically, these are the type of neighborhoods that when appreciation gets out of control and affordability goes down, it's high poverty neighborhoods, unfortunately, that typically bear the worst crash thereafter. It would be these areas in orange, particularly in these neighborhoods south of downtown Dallas and Orange. We have a very high poverty rate. Nearly 1/3 of households in these neighborhoods are below the poverty line. We can see median income levels of $25,000, $30,000. We can also see, zooming on over, that Fort Worth has a lot of high poverty areas, particularly around the city center. I would be careful buying in these locations. Again, historically, these zip codes have been the most volatile. Whereas if we head up north to these zip codes in gray, we see lower levels of poverty, higher median incomes in a town like Keller, in a place like Roanoke, in a place like Southlake. We see very low poverty levels, high median incomes. If we head on over to Frisco and Plano, we can see the same thing. So I think there's less of a chance of an affordability-induced crash coming to the areas in gray, given their lower poverty rates and higher median incomes. And if you actually do an analysis of the 2007 to 2012 housing crash and look at all the zip codes in America, the ones that crashed hardest in that last crash had high poverty rates and high rates of appreciation heading into the crash. Those areas in orange fit the bill this time around in Dallas. The areas in gray, out in the outlying suburbs, the wealthier suburbs, less risk in my opinion. However, that doesn't mean they don't have any risk. I believe the suburbs in Dallas, and particularly the outlying suburbs into the rural areas, have supply risk. Put simply, there's lots of new home building going on in Dallas right now. This is something that you all need to understand. There's this narrative going on in the US housing market that we're short homes and we're not building enough homes. That narrative definitely does not apply to Dallas, Texas. Dallas builds more new homes and apartments than pretty much anywhere else in America. I mean, just take a look at this graph, folks, where we're looking at the number of permits pulled in the Dallas-Fort Worth metro for new homes and apartment buildings over the last 30 years. And you can see that we are at a record high right now, entering late 2021, nearly 79,000 building permits pulled over the previous 12 months. That's a big jump from where it was even just 15 to 18 months ago, a roughly 20% increase in a short amount of time in the amount of building. And you can also see that we're well above the building and permitting levels that we saw in the mid-2000s, which was the period of time where people acknowledged America built too many homes in the mid-2000s. And you can see that Dallas is building more today than they were back then. All of the home building and permitting in Dallas is, of course, good news for you as a home buyer over the next several years. It's going to mean that there's going to be a lot of inventory, new inventory, coming onto the market in 2022 and 2023. However, the bad news is all this new inventory is likely going to push down home prices and values throughout Dallas. But once again, there's big differences you need to consider in terms of supply risk and inventory risk across the Dallas metro market, which you can see on this map where we're taking a look at the zip code level housing unit growth according to the US Census Bureau across the Dallas metro, and it's the areas in red that have the most new home building occurring. And you can see North Dallas and Collin County, cities like Frisco, McKinney, Celina, Prosper, Aubrey, and Little Elm have tons and tons of new home building. We also see big increases in building in northern Fort Worth, as well as actually in the middle of downtown, uptown, and Victory Park in Dallas. We're actually seeing more apartments and condos being built than single-family homes. However, nonetheless, big increases in inventory here as well. Meanwhile, the areas in gray have much less new building. Places like Irving and Arlington and even the center of Fort Worth have actually declines in housing units over the last 4 or 5 years. So you have less of a likelihood of a supply-induced housing downturn in the areas in gray. And this is where you really need to get nuanced in terms of your understanding of the risks in the Dallas housing market. If your neighborhood has a high poverty rate, that means greater risk of a housing crash. If your neighborhood has lots and lots of new home building, that means greater risk of a home price slowdown and home price declines. Meanwhile, if you're looking in a wealthy area with a low poverty rate, without much new home building, it's less likely that that type of area is going to experience a decline. However, more broadly, if you are buying in the Dallas-Fort Worth metro today, you should expect home value declines going forward over the next several years. That's just the simple reality of buying into a housing market where prices are at an all-time high, inventory is at an all-time low, while affordability is also at an all-time worst. That combination likely means future home price declines, especially in a market that builds lots of new homes and apartments like Dallas. And I think many people don't want to accept this reality. They want to say to themselves, oh, the migration from California is just going to continue forever. Oh, the job growth is going to continue forever. But the reality is migration trends tend to be cyclical. And while California does have a lot of people leaving right now, it also had a lot of people leaving 15 years ago and 30 years ago. And that at some point, people are likely going to return to California at some point. I know that's hard to fathom right now, given what's going on in the state. However, historically, migration is cyclical. Do not bank on these California buyers continuing to come into Dallas. At some point, that is going to abate. And at that point, the local housing market in Dallas, the $24,000 annual cost of home ownership is going to be borne by the local worker, the local person who's been in Dallas for a long time. And at that point, the housing market's really going to begin to struggle. I'm seeing potentially 15 to 20% declines in home prices throughout the Dallas metro over the next 3 to 4 years. I think those price declines are going to be worse in high poverty areas with lots of home building. They're not going to be as bad in wealthier areas with less home building. Now, to conclude things on a personal note here, I actually happen to live in Dallas. I moved here 3 months ago. I moved from Austin, Texas. I wanted to get away from the craziness of Austin and go to a place that was more traditional, more business oriented. And so far, I'm really liking what I'm seeing in Dallas. I think this is a great city, a great metro area that's going to continue to grow into the future from an economic and demographic perspective. However, there's no way that I'm looking at buying a house in Dallas right now. There's no way I would do that with inventory so low and home prices so high and seeing so much new home building and deteriorating affordability. I think higher mortgage rates, especially in 2022, are going to mess with Dallas's housing market. But that doesn't mean don't move here, and it doesn't mean don't buy something across Dallas right now. It just means have realistic expectations about what this current market is. It's going to be difficult to find a home that you like with inventory down 70% in 2 years. It's likely with prices at an all-time high that they will be going down, especially as mortgage rates go up. And that's just kind of the reality of the situation. All right, everyone, I hope you enjoyed this video. If you're a home buyer or a real estate investor looking into Dallas, make sure to comment below and let me know what you think about the data in this video. Do you agree with it? Do you disagree with it? What are you seeing in the Dallas housing market right now? When you guys comment, it makes these videos better. Additionally, if you enjoyed this video and you enjoyed the data, please make sure to hit the like button. That's the best way that you can support me in this channel, is hitting that like button and also becoming a subscriber. I come out typically with 3 data-driven videos per week, and I will be doing a series now of housing market deep dives in 2022. Dallas is the first city I'm covering. I plan on covering about 25 different markets over the next month or two. So if you want to see that content, you want to see your city covered, make sure to subscribe and also request it in the comment section below. All right, everyone, until next time, this is Nick from eVenture Consulting signing off. Data in this video came from 4 principal sources. Realtor.com is a great source if you want to understand the inventory levels in your market, zip code, county, metro, or state. Zillow is a great source for home value and home price data. This video continually referenced Zillow home value data and their typical home value. In addition, the US Census Bureau has great data on building permits, housing unit growth, poverty rates, both at a metro and zip code level. And then finally, the Bureau of Labor Statistics has great data on jobs, wages, and earnings in local economies. I'll have links to all of these sources in the description if you want to check them out for yourself.